A business can be profitable on paper and still feel broke at the bank. The work is delivered, the invoice is sent, but the cash has not arrived. AI invoice chasing begins in that gap. It watches due dates, drafts reminders, ranks overdue accounts, and turns scattered follow-up into a system. This is not about a robot bullying clients. It is about visibility. Money owed but not collected can quietly decide whether payroll, rent, inventory, and growth stay on schedule. Accounts receivable is the money customers owe after goods or services have been provided. It can make revenue look strong while cash remains trapped in the future. For small businesses, timing is brutal. Suppliers, employees, lenders, and landlords often need payment before late customers finally settle their invoices. Traditional invoice chasing can become a spreadsheet maze. Someone has to check due dates, send reminders, record responses, and decide when to escalate. Receivables tools connect that maze to accounting systems. They can see invoice amounts, due dates, customer names, payment status, and communication history. AI adds language and prioritization. It can draft messages that sound polite, firm, or conciliatory, depending on how late the invoice is and what the history shows. The value is not only collecting money. It is predicting pressure. A business that knows which cash is likely to arrive late can plan with less panic. The first function is monitoring. Invoices move from current to due to overdue, and the system keeps score without waiting for a finance manager to remember. Then comes reminder sequencing. A message before the due date can be friendly. A message after the due date may include payment links, invoice copies, and clear next steps. Tone matters because payment is a relationship moment. The best reminder is specific, accurate, and calm. It asks for action without assuming bad intent. Prioritization depends on history. A large invoice from a repeat late payer may deserve faster attention than a small invoice from a normally reliable client. AI can help rank risk using invoice age, amount, customer behavior, promised payment dates, missing responses, and dispute indicators. The model does not need drama, it needs clean data. Integrations reduce friction. If a reminder includes the invoice, payment link, purchase order reference, and due date, the customer has fewer excuses to delay because of missing details. Incoming replies need classification. A customer may say the invoice is paid, disputed, waiting for approval, sent to the wrong address, or blocked by missing documentation. Disputes should leave the normal chase path. If the customer contests the work, amount, tax, purchase order, or delivery, sending more automated reminders can make the situation worse. Forecasting turns follow-up into planning. If several large invoices slip by 2 weeks, the system can show how cash availability changes before the bank balance proves it. The strongest tools do not remove finance people. They tell them where attention matters, the biggest overdue balance, the riskiest account, or the client who needs a direct call. At the midpoint, the pattern is practical. AI does not create money from nothing. It reduces the delay between a payment problem appearing and a human acting on it. The turning point is escalation. Payment reminders may feel simple, but money communication touches contracts, local laws, credit terms, and sometimes debt collection rules. An AI system must respect the actual agreement. Due dates, grace periods, late fees, purchase orders, and dispute clauses cannot be guessed from a generic template. Over-automation can damage relationships. A good client with a one-time accounting delay should not be treated like a hostile debtor by an unstoppable reminder machine. Bad data creates bad chasing. Duplicate invoices, wrong email addresses, incorrect tax amounts, missing purchase order numbers, or unrecorded payments can trigger embarrassing messages. Human approval is essential for sensitive accounts, large balances, disputes, or escalation language. The cost of a wrong message can be larger than the overdue amount. The system should understand relationship value. A late invoice from a strategic partner may need a different path than a one-time customer who has gone silent. Financial data is sensitive. Access controls, audit logs, secure integrations, and careful vendor choices matter because invoice systems contain payment behavior and business relationships. The best invoice AI is disciplined. It nudges clearly, documents every step, escalates carefully, and leaves room for context that no model should invent. For small businesses, the main benefit is attention. Late invoices stop hiding at the bottom of a spreadsheet and become a visible operational cue. For finance teams, automation can remove repetitive reminder writing. People can spend more time resolving disputes, building payment plans, and talking to high-value customers. For customers, good automation can be helpful. A clear reminder with the right invoice and easy payment route is better than a vague email sent weeks too late. Cash flow planning improves when expected payments are tracked honestly. Even knowing that money will not arrive on time helps a business avoid surprise decisions. The next stage is deeper integration. Receivables data can connect with customer records, bank feeds, payment processors, and forecasting systems to create a living finance map. Documentation becomes stronger too. Each reminder, reply, promise, dispute, and escalation can be recorded, making the payment history easier to audit. Predictive receivables may flag risk before an invoice becomes overdue. If a customer regularly pays at 45 days, the business can plan around reality instead of terms on paper. By the final finance check, the promise is narrow but valuable. AI can improve discipline, speed, and visibility. It cannot guarantee that every customer has the money to pay. Late invoices are not just numbers. They are delayed oxygen for a business that already did the work. AI can help by making follow-up consistent, polite, and timely. But asking for money still carries tone, law, and relationship history. The best system does not chase harder for the sake of pressure. It chases smarter, correct data, clear messages, careful escalation, and real human judgment. In the end, Invoice AI is not an autopilot for conflict. It is a control panel for cash flow, reminding businesses that money earned is not money usable until it arrives.